Hi everyone and welcome to another edition of Realty Talk. Thanks for joining us today. With Q1 2025 showing signs of a market slowdown and global tensions heating up, there is a lot on the table. Is this just a breather or the start of something bigger? Before we begin, please note the following disclaimer. While every effort has been made to ensure the accuracy of the information shared today, ERA accepts no responsibility for any loss or inconvenience caused by errors or omissions. The insights, opinions, and examples presented are for informational and educational purposes only. As the property market is dynamic, we strongly encourage you to consult a trusted ERA advisor before making any property-related decisions. Tonight, our CEO of ERA Singapore, ERA Asia Pacific and APAC Realty, Mr. Marcus Chu, and Key Executive Officer Mr. Eugene Lim will help us make sense of the uncertainty. From interest rate movements and US Fed decisions to where new opportunities may lie, they will unpack the key developments that matter to your property journey. So, let's get started and find out how you can stay ahead of the curve.
Hello everyone, welcome to Realty Talk, brought to you by ERA. I'm Eugene Lim, Key Executive Officer of ERA.
And I'm Marcus Chu, CEO of ERA Singapore. Welcome to ERA Realty Talk.
So Marcus, what are we going to be discussing this segment?
Well, as the title of today's Realty Talks says, it's about market disarray, world in conflicts. What is the smart strategy in today's property market?
That's right, the tariffs has caused some concern, and so tonight we're going to share with you some information that will give you some roadmap how to go ahead. So agenda will be, firstly, we're going to look at the home market forecast, first quarter, what has transpired, and going forward, what is the forecast like. We will also look at the shock waves from the trade tariffs. What can we expect from this time of volatility? And of course, we will leave you with the smart strategies of how to navigate in today's market conditions. So let's go into the 2025 Singapore home market forecast. With the first quarter data already out, so let's look at whether the market has bottomed out and where is it going to go from there. Okay, so in the first quarter, property prices generally grew at a slower pace. So if we look at the first quarter, the growth in non-landed particularly is only 1% compared to 3% in the previous quarter. All right, so but put in perspective, over the last 3 years, non-landed since first quarter of 2022 has grown 22.3%. So we're still seeing very steady growth over the last 3 years. Okay, and landed has grown by 15.1% and HDB 26% over the last 3 years. So the market is still growing very steadily in terms of pricing. Okay, let's look at the non-landed market a bit more in detail. Prices have grown, as I earlier said, 1% for the first quarter. And so for the whole year, with what is coming on stream and transaction momentum holding well, we expect prices to grow by 3 to 5% for this year. Okay, next. Residential prices have largely stabilized, and you find that growth in recent times has sort of like been very stable. So Marcus, what do you think has caused prices to stabilize?
Okay, actually, when we talk about the private residential prices, it comprises of new launches and resale property. So it's a combination of both prices. Okay, so as you can see from the chart here, since first quarter 2022 all the way to first quarter 2025, the rate of growth for new launches has actually up by 14.2%, whereas resale and subsale has actually gone up by 21.5%. Okay, don't get me wrong, that doesn't mean that resale prices is growing at a faster pace. Actually, what it means is that the new launch prices that is set by developer has actually stabilized at a more affordable price. Actually, what I'm trying to say is new launch typically set higher new home price. Don't you agree?
That's right.
All
So they typically drive the market, and the resale actually follow the new home market.
Okay, but we experienced that in 2024 last year, there are more new launches towards end of the year. But typically for the whole of last year, there are actually fewer launches, all right, in the over island-wide, especially in CCR, and more launches that is on the city fringe and also OCR. So the lack of new launches could be one of the reasons why there is no new benchmarks price set, and therefore led to moderations of price increase.
Yes, I think also the other factor is developers are nowadays very conscious and they price very competitively. Yeah.
Okay, as you can see from the table, all right, since the first quarter 2024, which is the most recent launch price, first quarter 2024 is at 2,374. That is for the new launch average PSF, and right now is 2,478. So prices is marginally increased by $100 per square foot, whereas for resale is 1,689 and now is 1,780, which is also about $100 PSF. So I would say that private residential price actually has stabilized.
That's right. Okay, so if we look at, there's quite a lot of numbers in this chart. So if we look at the performance in terms of sales transactions, all right, so if you look at the first quarter for new sales, we are looking at 3,375, right, compared to the previous quarter, 3,470. So there's a marginal dip in terms of the number of transactions, but compared to the first quarter of last year, which only done 1,164, there's a significant increase in the volume of transaction. All right, so we are also seeing similar patterns, all right, similar patterns in the resale market.
Yeah, so the resale market in the first quarter is 3,009, whereas the first quarter 2024 last year is at 3,000. All right,
Yeah.
there's an increase in resale transactions, which makes it a total of 7,002 for first quarter in terms of total number of transactions of resale and new homes. As compared to first quarter 1 year ago, is only at 4,002, which means quite a significant increase in new launch transaction and also resale transaction. Okay, but we put into perspective of the whole of last year, okay, and the forecast for 2025 by ERA, the whole of last year, if we are looking at all private exclude EC, there is 21,950 transactions, all right? Whereas non-landed, which is only condos, except exclude EC, is at 19,905. Okay, our forecast this year, 2025, the overall transactions will be between 23,000 to 26,000, all private property exclude ECs. And for non-landed condos and exclude ECs is at 21,000 to 23,000 transactions. So we will be seeing more residential transactions this year.
Wow, that's good news. Okay, so let's move into the landed property segment. Prices seem to have softened a bit. So is it that right time to buy that landed property? So let me look at the numbers first. So if we look at the numbers, there were the third and fourth quarter of last year, we saw that prices of landed property dipped by 3.4% and 0.1% respectively, but it has a slight rebound of 0.4 this year. So this seems to suggest that landed pricing has sort of stabilized, and I think is it a good time for us to move into the landed market?
Okay, from what we observe is landed segment is very well balanced in terms of resale and also demand. Okay, demand comes in strong when price soften. There is always aspirations of most Singaporeans to move into the landed segment. Okay, because owning your own piece of land, build your own house, and that is a dream, isn't it?
Yes.
Eugene. So that Does it mean right now is the best time to move into landed? I would say yes, because if price have softened, it actually open up windows of opportunity for homeowners who want to upgrade to a landed property.
Correct. So maybe we look at the volume of transactions. That should tell us some indication of how the market is moving.
Right.
So from this, we can see, Marcus, that the demand seems to be pretty resilient, right? In the last 12 months, we saw landed homes transact. There were more transactions compared to the average quarterly. So the red line actually shows us the 12 quarter average transaction, and the last 4 quarters, from second quarter to the first quarter this year,
it is above the 12 quarter average.
Yeah.
Right.
So this seems to suggest a very active landed property market.
Yeah. So very interestingly, we are also witnessing some older landed homes owner right-sizing and selling their landed property to buy condo.
That's right. So this has added to the volume of transactions.
I would say at the same time, the rising private property prices has also helped support homeowner to upgrade to their dream landed homes. So those who want to upgrade, they sell away their resale condos and then move up to the landed homes. And also those who are selling their resale HDB to move up to landed home also.
That's right. So there's a fair bit of upgrading and moving around in the landed property segment.
Okay, so in Q1 2025, we saw luxury landed properties that is 10 million and above. Transactions rose 21.6% quarter on quarter, and signifying more of the wealthy home buyers acquiring higher value landed homes. So if you are hunting for a dream landed homes, low borrowing may not get you the deal.
Yes. I think generally you don't expect sellers to be able to want to part with their landed if you lowball their price.
Yeah,
right.
Before the landed home is gone, I think you should put in offers that match the seller's expectation.
That's right. Okay, so let's move into the HDB resale market. So HDB resale prices has been going upwards despite a slight slowdown in the number of transactions. If we look at this, the first quarter this year, prices grew by 1.6%. This seems to have slowed down compared to the 2% that we see every quarter for the last year. All in all, prices are still on the uptrend. So if this current momentum keep pace, we are likely to see 3 to 6% on the year-on-year increase for this whole year.
Right.
I think largely the price increase has slowed down largely because the base last year is actually already very high. So sort of like reach some resistance level, but market is still moving upwards because of very high volume of activity. Okay, so let's look at volume of transactions. Volume of transactions moderated slightly due to fewer MOP flats, okay, this year.
So what does MOP flats have to do with the resale transactions?
I think there's always a very active market of buyers looking to buy MOP flats because these flats are new, move-in condition, and they have long unexpired lease, which is a number one priority on the shopping list of most HDB buyers.
Right.
Yeah.
Right.
And I think volume also took a slight dip because this year itself, HDB launched a bumper crop of BTO flats as well as their sale and balance flats. It's one of their largest ever exercise to increase the supply of new flats into the market. Their intention, of course, is to recalibrate and balance the market due to, of course, very active demand.
So it looks like there is huge supply of HDB BTO flats.
Yes.
Flooding the market.
So HDB BTO flats and sale of balance flats typically appeal to the first-time buyers because they are given priority, right, over existing flat owner who already have a home.
Right.
Yeah. So by taking away, by attracting this demand segment, there is less buyers in the resale market.
Very interestingly,
Yes.
we noticed that those demands that comes in from upgraders who already own HDB flats,
Yes.
going for their second BTO flats,
Yes.
the oversubscribe rate can be as high as 40 times.
That's right.
It is very difficult for them to upgrade to another BTO flats.
That's right.
So that's where they go for the resale market.
Yeah. So the active buyers in the HDB resale market are largely existing HDB homeowners who don't want to take their chances in the BTO market.
Okay.
Right.
So let's take a look at the supply of MOP flats expected to be in 2025.
Okay, so if we look at the bar charts, so there's a significant decline in the number of flats that is going to attain their MOP this year. It's 6,900 compared to 11,900 last year. All right, and the going forward, of course, in the upcoming years, the MOP flat supply will gradually increase due to the construction schedule. Right, so there was a slowdown, all right, in the construction schedules due to COVID. So hence, we are seeing a slowdown in the number of flats that is turning 5 years.
Well, actually, this 2025 new MOP flats that is coming on board into the market, it's those flats that is offered for sales 5 years ago plus another 3 years construction, probably 8 years ago.
Yeah,
and that is like somewhere in 2017, around there. Right now it's going MOP,
yes,
and it's like the lowest, all right, over the last, at least over the last 5 to 6 years.
So the implication on price is very simple. So with the lesser amount of MOP flats coming on stream, but demand still remains high because they are very popular.
Right.
So this is likely to drive prices continuing to go upwards.
Well, so if you can take a look at this table here, on the average for the next 5 years from now, 2025 to 2029, the average supply of MOP flats is at 12,900 flats. Whereas over the last 5 years, from 2020 to 2024, the average supply of MOP flats is 20,800. So there's quite a significant drop in MOP flat supply.
That's right. So this tight supply will probably ensure that prices will continue to be going upwards.
And usually new MOP flats will be able to fetch benchmark new resale price. Won't you agree?
Quite likely, especially those in mature estates and centrally located, very good attributes.
To MRT.
Yes. High floor, good view.
Yeah. Yes, and that could explain why there is rising million-dollar flats.
Yes. So there's a rising number of million-dollar flats, as we can see from the charts. It's at first quarter this year, it's 348. It's the highest quarterly number of transactions for million-dollar flats. So one would be asking, why is this so? All right, why is this so? So as we just explained, because of the shortage of MOP flats coming on stream, and coupled with high demand and very limited number of flats in premium locations, this has driven the prices high.
And right sizing of private property owners into the HDB market.
That's right.
Will also means that there is more buying power.
Yes, we are also seeing a significant number of upgrading within the HDB hierarchy. So some of these buyers are originally intended to buy private, but they look at the attractiveness of this because a similar private property in the same location with the same location attributes will be double the price of these million-dollar flats.
So it makes the HDB resale flats more attractive.
Correct.
So in a nutshell, what is Q1 2025?
Okay, so let me just do a quick rundown. So in the first quarter, our summary is as follows. There's a slower pace of price growth for private property market. Private home transactions continue to be pushed forward by new home transactions. Landed transactions picked up in the last 12 months. We're also seeing more landed property owners right-sizing their landed homes and also buying condos. All right, so they sell their landed to buy condo. And we are also seeing higher private home prices pave the way for homeowners to be able to upgrade to landed homes.
So there's a lot of recycling of demands and supply.
That's right. So the market is quite resilient and the market is very active. And actually, in today's market, we notice quite a lot of home buyers are pretty sophisticated. They are making use of the opportunity to move to possibly bigger and better housing. So in the HDB resale market, price growth has moderated due to higher base from the Q4. We
That's
are seeing fewer MOP flats this year, and so this is likely to push up prices in the HDB resale market.
Okay, let's look at the government land sales.
Okay.
And I understand that there's no bid for the latest Media Circle Parcel B.
Yes, the latest Media Circle Parcel B that was just concluded, I think recently, there were no bidders for this. So
But on the average, over the last 9 months for government land sales, the average of bidder per site is actually about 2.9 bidders per site.
Okay.
So is it very surprised to see that April 2025 Media Circle Parcel B, there's no bidder at all?
I think it is possibly a situation caused by the uncertainty in the market.
Oh, yes.
Yeah, due to the tariff, our main topic
Which is
tonight.
what we're going to talk about today.
Yes, that's
so
right.
later on, we'll deep dive into why there is no bid for GLS.
Yes.
All right. Okay, let's take a look at the summary table that we have just tabulated for everyone here. Very interestingly, we would like to show you over the last 24 months the recent government land sales and en-bloc sales land costs and their corresponding launch prices. So we have been monitoring this for a while, and I would like to share that looking at the launch price of the different regions, be it in the RCR or the OCR, the launch price is actually more than doubled of land costs. Okay, primarily because of the escalating cost of construction and also labor and marketing and also professional fees. And most developer will price it very attractive in the early stage of their land, of their project launch. All right, so as lock in sales, but over a period of during the construction phase, the selling price will be escalating and increase in price as sales increase.
So if I'm buying a new home today, it is better to buy as early as possible in the launch, right?
Right. Actually so, yes. Okay, let's take a look at the how is the property market amidst shockwave from trade tariffs.
Yes, which is the main topic tonight. So what shockwaves has it sent to the financial market? So I think on the 3rd of April, Trump announced a series of tariffs, right, that caused tremendous, I think, impact on the financial markets. Yeah. So so initially, I think most countries are hit by high tariffs. While Singapore was fortunate to have a minimum 10% tariff rate. I think after he launched this on the 10th of April, I think Trump also announced a 90-day pause on reversal, on the tariff reversal. Yeah, and except for China, Canada, and Mexico, which still impose high tariff.
So there's so much uncertainty in the market.
Yes. Yes. So there's a constant change in the US policy, right? One day is this, the next day is that. So situation on the ground is very fluid. So when this translates to stock market, what will happen?
Of course, it goes havoc.
Yeah.
It's needless to say that the stock market is in extreme volatility once the news of the tariff was introduced on 3rd April. Actually, what we can see is the stock market actually plunged all the way down, right? When Trump's introduced huge tariff across the whole world.
Yes.
But nevertheless, when the market
10 of April.
realized that there is a tariff pause, the market actually recovered.
Yes.
But then China have retaliated.
That's right.
All right. with its own tariff, and Trump has also upped the China tariff to 145%.
Yeah.
And that also caused
The market to
the
dip
market to dive down again.
Yeah.
So what this means to the financial market is it is facing a lot of volatility, extreme volatility, because of so much uncertainty ahead. And I also realized that quite a lot of analysts actually do not want
again. They
to
do not want to comment.
analyze and comment.
Yeah.
Because it's
whatever
very
you comment
chaotic.
today, tomorrow may be changed.
Yeah, there's so
Yeah.
much confusion and chaos.
Yeah.
And Trump's tariff pause has yet to settle.
So amidst this chaos, what does it mean for the Singapore property market in 2025?
So let's take a look at April 2025. What happened in the property scene in Singapore?
All right. So after a promising take up in the first quarter of this year, buyers seem to have taken a slight pause in April. I think this is a knee-jerk reaction, possibly caused by the uncertainty in the tariff. Okay, so if we look at the launches in April,
the launches in April is in
Bloomsbury.
the RCR region.
Yes. So 2 projects there, Bloomsbury Residences and 1 Marina Gardens. So the take-up rate is 25% and 38% respectively, compared to the last quarter of last year and also the first quarter of this year, where launches saw a very, very high take-up rate of 99% and 86%. All right. I think this is just a knee-jerk reaction. I think some buyers are confused, all right, by the what's the ups and downs, one day up, one day down in the stock market. And property sentiments, as we know, is very closely related to the stock market.
Well, I think that is like what you say, knee-jerk reaction. Actually, these numbers is taken in the beginning of April over the booking weekends. But over the last 1 month, the sales have actually picked up.
Yes.
Day by day, units are selling at Bloomsbury Residence and also 1 Marina Gardens.
Yes. So it's a clear indication of a knee-jerk reaction where buyers just pause, right, to take stock of the situation. And you find that the buyers who are confident, right, and make sense of things, they do come back and pick up the units.
Yeah.
Especially when the project have very good attributes.
Correct. So what you have seen here is the take-up rate over the booking weekend does not reflect the demands of the project over the construction phase. And in fact, like I say, over the past 1 month, sales are picking up again.
That's right. Okay, so we talked about this briefly just now. There were no bids for the April closing of the GLS site at Media Circle Parcel B. Right. So what can we understand from here?
Okay, this is Parcel B, and this is Parcel A. Parcel A was actually sold earlier in March 2025. And this is the site where Bloomsbury Residences are awarded in January 2024. Well, Media Circle Parcel A, as we know, URA is actively ensuring that land will not be sold at too low a price. All right. So if the developer managed to buy the land cheap, it does not mean that they will sell cheap. And they have more headrooms to sell higher price for more profit. All right, because Parcel A price is slightly lower than the Bloomsbury Residences. Okay. However, for Media Circle Parcel B, there is no bidders in April 2025, which is the first site since news of trade tariff broke. So this is perhaps a reflection of the uncertainty currently, and the developer may need more time to digest what is ahead.
That's right.
So our government has also the flexibility to reconfigure, repackage, and relaunch any unsold site at the opportune time in the future.
That's right. So this site, no bidders doesn't mean it's gone forever, right? The government may likely to reconfigure the site and relaunch it at some future opportune time.
Right. So Fed remains in a wait and see mood currently.
Yeah.
Seems like there is also a pause in rate cuts.
So that means, is that going to be no more rate cuts, or what do analysts say?
Well, we observe that analysts has revised its rate cuts for 2025 to 2 times for the whole of this year instead of 3 to 4 times.
Okay.
Okay. Looks like there is some wait and see moods by the Fed, and market is still processing policy shift. Okay, so let's take a step back and reassess the situation sensibly.
So let's look at the recessions over the last 20 years and its impact on the property market. So if we look at this time series here, there were 2 periods of obvious recession period. The first one is the global financial crisis in the first to second quarter of 2008. And the second period of recession that we see was the start of COVID pandemic, right, in the first to second quarter 2020. Other than that, all right, other than these 2 periods, even the start of the Russia-Ukraine war, right, and the impact of the tariffs thus far has not impacted the Singapore economy and caused any recession.
So the recessions that we are experiencing over the last 20 years is primarily caused by the global financial crisis and also COVID-19 pandemic.
That's right.
Okay, so how would that means to Singapore property market and the financial market?
So if we look at this chart here, the red line which shows the Singapore property market, you can see that compared to the financial markets, which is a lot more volatile, there's a lot significant up and down, the Singapore property market curve is quite smooth and is trending upwards, right? So this tells us that our market does weather over any crisis period, all right, and it continues its price increase over the longer term.
Okay, let's talk about the last 20 years, all right. At the start of 20 years ago, which is first quarter 2005, all right, we are at this point A here.
Yes.
And then right now, we are at this point here, B. So from A to B, financial market, property market, and Singapore economy have actually rise from point A to point B. So despite recessions over the last 20 years, all financial market, property market, and Singapore economy has rise.
That's right.
Okay, but let's dive into the correlations between financial market, economy, and also property market, okay, during global financial crisis. Okay, so during global financial crisis, we observe that the S&P 500, which is indicative of global financial market, is down from the start of the recessions to the end of the recessions. Whereas Singapore property market continues to rise and eventually came down also, all right, until the end of the recessions, all right. And the economy actually stays quite firm, even during recession. And then if we dive into the recent COVID-19 pandemic, as you can see here, the global financial market actually dived in the initial phase of the crisis and eventually recovered, all right, even during recessions. The economy is actually down during the pandemic, whereas the Singapore property market stays very stable during that crisis period. So right now, we are at this point B. And at point B, the global financial market have actually up in the peak and now dive down. The market have actually corrected, all right, as much as 10 to 20%. And the economy is still doing fine. And Singapore property market is still doing fine. So this is the current situation right now. All right, as you can see, I would say that over the long term, the Singapore economy, the global financial market, and the Singapore property market is expected to be on the uptrend still, if you take a long-term perspective.
That's right. So let's look at the next slide. So this is a map of the PPI, Property Price Index, and the property sales, and mapping into with all the so-called economic shocks and crisis period. So this tells us that this continues to show us that property sales as well as property prices will weather each economic shock, and it will continue its upward trend over the longer term.
Yeah, actually this is even longer. This is like over almost the last 30 years, because this is first quarter 1997.
That's right.
Where we experienced Asia financial crisis, all right, dot-com bubble burst, SARS, subprime crisis, the first presidency of Donald Trump, and followed by the COVID-19 lockdown, followed by Russia-Ukraine war, and right now tariff. So once again, from this point A here to this point B here, Singapore property market has stayed resilient and have risen steadily, weathering each economic shock.
So right now we are seeing a lot of tit for tat, right? Trump hits China, China hits back. So what if the trade war continues to escalate?
Well, we all don't know what will play out, but let's put it this way, there is a lot of uncertainty there in the market. So immediately in Singapore, we witnessed the active government action to mitigate the impact and the risk of the world tariff. Okay, let's put it this way, to help address immediate uncertainty, a new task force comprising economic agencies, the Singapore Business Federations and NTUC has set up and aim to help businesses and workers to address the immediate uncertainty. The government is certainly continuing to monitor the developments closely and will stand ready to do more if and when necessary. We can actually witness this in the recent COVID-19 strong government support, where 100 billion received relief package from strong national reserve to support public health, workers and business and household are budgeted. Okay, in fact, for business, homeowner and household, you can be assured of the strong government support to weather any crisis.
So the learning point is that from past crisis, government steps in and takes in a proactive step to sort of cushion the impact, right? Than any negative impact of any that it can be caused by this crisis.
Yes, and you take a look at the packages that was given out during COVID-19 pandemic. There are rent relief and rent-free period for businesses. For homeowners, there is also refinance relief and mortgage support for property loan, and also property tax rebate, mortgage repayment deferment. And for household, there is also temporary financial support for those who have lost their job. There's cash payout. There's also grant for self-employed person. So as you can see, there is a lot of support that is given during crisis time.
Okay, so what about the current position in Singapore? I mean, there is uncertainty caused by the tariffs, but are we able to attract foreign investments?
Yeah, I think if we talk about this in terms of Singapore property market, what's important is the market sentiment. So if market sentiment is well supported by jobs and also rising incomes of every household, that will also means that there is stability in the housing market. Okay, so in this aspect, I would say a stable government and a business-friendly environment will certainly help Singapore to attract foreign investment. And what this means is with more foreign investments, there's also a chance that the jobs are preserved and also rising household income.
Yeah. So foreign direct investments is our barometer to indicate the confidence level in Singapore. So you can see that confidence level in Singapore is actually increasing because of our strong economic fundamentals and quite possibly political stability.
Okay. So what are some of the smart strategy from today's homeowner that we have witnessed? So let us show you some case study of smart homeowners who upgrade during COVID-19 pandemic. They are examples of homeowners who do not want to waste a good uncertain time. All right, I would not like to say crisis. I would say uncertain time. All right. So how do they do that? They actually upgrade from HDB to new condo during COVID-19. So this case study shows you why homeowners are doing that. They sell away their 4-room HDB and then they buy a new condo during the pandemic time. And these are true examples of some of the transactions that were witnessed from our agent. Their clients are selling their HDB flats and buy a condo during that time. The new launch is called Cravon. And by selling the 4-room HDB flats, there is a sales proceeds of 760,000. And by buying a 3-bedroom Cravon, which is the new condos, it cost them 1.845 million. All right. And right now, the 3-room Cravon is worth 2.3 million. And that gives them a paper gain, unrealized profit of almost 500,000. All right. That is over the last 5 years.
So what if they didn't take action and they continue to stay in the HDB flat and never buy anything?
Okay, as we know, the HDB price index has also raised over the last 5 years, all right? And the 4-room HDB flat 5 years ago it was sold at 760,000. If they do not sell it, they still continue to stay in that 4-room HDB flat. Today's that value is 935,000, which gives them an unrealized profit of 175,000. And what this means is the unrealized profit of the private new condos versus the HDB flats is much higher. So that's pretty smart move, isn't it?
That's right.
Because during uncertain time, the condos, the developers of the new launch condo will price the property at a more realistic pricing.
That's right.
All right, in order to get the sales going.
Yes.
Okay, so by doing so, there is a window of opportunity for home upgraders to do this move. Okay, buying into something that is reasonably priced and over and beyond the uncertain times, prices will appreciate.
That's right.
At a faster pace.
Okay.
There's another example, which is upgrade from resale to new condos.
Okay.
That means a condo owner sell away the old condos and upgrade to a new condo during COVID-19. This case study is a homeowner actually sell the Clement canopies and buy Cravon. So a real true example that there is a sale of Clement Clementi of a 2-bedroom. And it was sold at 1.088 million. And then buy a 3-bedroom Cravon, bought at 1.845 million. And right now, the 3-bedroom Cravon is 2.321 million. That gives an unrealized profit of almost 500,000, which is 476,000. So continue staying in Clement canopies. Right now, the value of the 2-bedroom Clementi is 1.432 million. And that gives them an unrealized profit of 344,000.
Wow.
So what this means is there is really a difference in terms of unrealized profit or asset value over a period of just 5 years.
Right.
All right, between new condos and old condos.
Right. So it's better to buy new rather than to stay in an old resale. So though post property, the price will increase, but the rate of price increase and the amount of price increase for the newer property is more than the older property.
So in a nutshell, if you have the financial means, why not upgrade during uncertain time?
That's right.
Because it is proven that by doing so, there will be better asset value increase.
Okay. Next. So, hey Marcus, I noticed that some homeowners, they are selling away their old condo and buying new condos.
Right.
So why, I know we just talked about it, but let's look at some example.
Okay, we just talked about
why is this so?
profitability of smart homeowners who do their upgrading during uncertain time. Okay, so one of the reasons is because developer price it very attractive during uncertain time. Of course, during certain time when the market sentiment is very positive and very strong, developer will not price it at reasonable price. It's always higher price.
Yes.
I mean, since when developer price it at low price? I mean, so right now, actually, we can see that developer is very reasonable at their pricing. Okay, but there are more reasons why people are switching from old condos to new condos. Actually, we have mapped out 4 reasons, Eugene. Okay, the first reason is lease decay concern. All right, because buyer preference is actually for new homes that have long lease and not shorter lease, you know. So that means new condos are preferred. So this chart actually tells us a story, isn't it?
Correct. So if you look at the red bars, almost 60% of buyers actually prefer homes that are less than 10 years old.
And this is quite progressive. I mean, you take a look at it. Over the last 5 years, it was originally 43% of buyers buying into homes that is below 10 years old. So right now, it has increased to 58% of the total number of buyers.
Right. So increasingly more home buyers are becoming aware of the lease decay, big issue. And so therefore, they always look for the newer properties compared to the older properties.
So if it's not new launch, they'll go for resale properties that is like less than 10 years.
Yes, that's right.
So those that is greater than 20 years is actually a small numbers of buyers. Those that is 21 to 30 years is 15%. And those that is 11 to 20 years is 22%. So more than 50% at 58% is made up of buyers who wants to buy homes that is below 10 years old.
That's right. So what's the second reason?
Changing demands. All right. Previously, buying a home is all about locations and affordability. You know, do you know that we have recently done My Dream Home surveys, all right, which our respondents are consumer. All right. So besides affordability, there's a lot of other reasons why all these attributes makes a dream home.
That's right.
All right. There's proximity to public transport, size of the property, neighborhood, environment, amenities, investment potential, proximity to work, proximity to school and facilities. So buyers today have more considerations.
That's right. They have a whole checklist of criteria when they go house hunting. So it's no longer just location and price.
So the key question is, does your current home meets all these requirements? And the next reasons is higher property tax for investment properties. And with that higher property tax, it means it will erode yield for investor. Okay.
Okay, so let me explain how it works. So if we buy a property for investment, your property tax is actually a wealth tax, right? And it's a layered property tax system.
Right.
That means the higher the annual
It's tiered.
value,
Mm.
right? The higher annual value, the higher your tax rate. And property tax rates for investment properties are already higher than owner-occupied property tax.
So non-owner occupier residential tax rate have actually increased since 1st January 2024.
That's right. So with the tiered system, depending on your annual value, it can, this graphic here shows you that it can go up to 36%.
And that is for
annual
properties that has
value,
higher
yes,
annual value.
yes,
That means
that's
for the
right.
bigger property.
That's right.
All right. So if you own a bigger properties that you use it as an investment property, right now you are actually paying higher property tax.
That's right.
Much higher property tax than before. Wow.
Right. So correspondingly, high property tax, then you have to look at the rent that you can collect from your tenant because you're holding it for investment. And rental growth, as this graph shows you, has been stagnating since the first quarter of 2023. That means rents is no longer a landlord's market, all right? So the rents are trending downwards due
So
to
first quarter 2023 until first quarter 2025, the rents index have actually dropped from 152.3 to 147.3 for CCR property. RCR property 165.7 actually has increased to 168.6. And for OCR property have increased from 165.6 to 166.8, which is not very much increase, which means it is stagnating. All right, over the last 2 years.
All right. So if we look at next chart, this shows
rent
us
is stagnating, property tax is increasing. What does that mean to the yield? It means the yield is falling.
So yes, that's right. So property tax, all right, is calculated based on annual value, right? But the annual value will take some time to adjust, right? Once it goes up, it never comes down, right? So your tax stays that same rate, but actually on the ground, your rent that is collected, right, is going down. So if you look at a 2-bedroom in Jadescape, right, and a 3-bedroom in Jadescape, and they are trending downwards, right? From first quarter, it was 6,003. In today, a 2-bedroom in Jadescape, you can get only maybe 5,002, right? A 3-bedroom,
So
$7,000.
$1,001 drop.
That's right. So 7,004 for a 3-bedroom, and today is about close to 7,000. So it's also a drop. So other locations, another example, Affinity at Serangoon, we are also seeing a similar trend going down. So property tax stays high, actual rent collected low, all right, going downwards. So what does it mean, right? So it means that it will eat into your yield.
Right. So when buying investments, new homes seems to be better than old homes.
Yes. Why? Because new homes you can fetch higher rental compared to older properties.
Actually, if you buy new launches, there is no property tax yet because you have not taken over that property yet.
Correct. The property tax only comes into effect when you collect your keys.
But of course, there's no rent yet.
Yeah.
But there is progressive payment advantage. All right. So next reason why smart home buyers prefer new homes than resale home is that new home preserve their price better than older ones. Eugene, can you explain on this?
Okay. So if we look at new homes often they see a spike after TOP. So you buy at one price, but when it reaches TOP, the price will spike. All right.
Now, take for example here, Jadescape price actually surged 10.8% quarter on quarter after TOP.
Yes, that's right. So compared to a older property, all right, we find that over the same period, it grew by only $385 per square foot compared to Jadescape, right, which has grown by $591 per square foot.
All right. So Jadescape was launched in third quarter 2018. If we take into comparison of Seasons View, all right, between Jadescape and Seasons View, the price increase is quite significant.
Yes. So this tells us that newer properties hold their price better compared to older properties.
Or even though there is growth, all right, overall in the private residential segment, the rate of growth for new condos is actually faster,
Yes,
all right, than the rate of growth for old condos.
that's right. So here we have another example, which is two similar properties. One is new, one is old. All right, and you find that again, the trend shows us that Sterling residences, all right, there's a spike in price after TOP, right, and over time, all right, it has also rise higher the price compared to the older condo.
Okay, so in a nutshell, it is good to look into rebalancing your property portfolio
Yes.
to avoid potential losses. So like we say, don't waste a good uncertain time.
Right.
So there is least decay concern because your future buyers may not want to buy your property
That's right.
if it's getting older and older.
Yes. And the lease period is getting shorter and shorter.
Yeah, so their preference is the newer homes.
Yes.
So if nobody's preferred your properties, it means you have to lower your price in order to get it out.
That's right.
Next is also changing demands of today's buyer.
Yes.
So today's buyer are more sophisticated. Their demands is more. So if your property do not meet up with that demand, there is a higher risk of price erosion. Then there is also higher property tax for investment property. So if you are holding on to investment properties, then that is not giving you good yields after taking into consideration of the cost of holding that property, then it may be wiser to rebalance your property portfolio. And also slow price growth for older properties. It's so real that the new condos with new facilities is certainly more attractive for capital appreciation.
Right. So let me summarize. If your property, all right, if my property is not recently TOP or it does not have a long unexpired lease term, then I should consider rebalancing my portfolio. If I go through the checklist of what's in the mind of the buyers today, it's no longer about price and affordability, location and affordability. They have a detailed checklist. If my property does not fit their detailed checklist, then it's worthwhile to consider switching. If my property is not owner-occupied, it's an investment property, but the rents I'm getting is not is trending downwards, then versus the high property tax rate, then you may want to consider changing an investment property, looking for another property to do that. So bottom line is that if I'm not seeing strong rental or there's no demand, right, put a property up for sales, demand is slow, then it is worthwhile to consider buying that newer property.
Okay, so can we seek out some opportunities for our audience here?
Okay.
Amidst the uncertain market.
Right. So, Marcus, there is a slew of projects that we are spotlighting. All right. And maybe let's go through some of this list. So we have quite a few of them in various parts of Singapore. This is there's something for everyone, right? So there's Union Square in the downtown core. All right. There's also One Marina Gardens in the Marina South area. And also, not to forget, recently launched Bloomsbury at Media Circle. Right. There's also in the east, the Continuum and Mayor Blue, all right, which for fans of the east. And for those who like the west, all right, there's also Lake Garden Residences and also Sora. So there's quite a lot of projects up for selection in the current market. So if we look at projects that are previewing soon, all right? Coming soon, all right? So there's a whole slew here. So upcoming, we have Arena East Residences. This is in the Tanjong Rhu District 15 RCR area.
Wow, for a long time, there isn't any launch in Tanjong Rhu.
That's right. And this is a freehold project, all right?
Certainly a lot of pent-up demand in that location.
Correct. For those of you who prefer non-residential, we have an Eco Food at Mandai. This is a food factory project.
It's a freehold
Freehold.
factory industrial property.
That's right. And then for CCR, we have W Residences, right? W Residences Singapore Marina View, right? And it's also up and coming.
Wow,
in
it's a
the
branded
CCR.
development.
Yes.
Mm.
For more boutique project, we have Artisan 8 in Xingming area. That's RCR.
And once again, it's a freehold project.
That's right. And for those that prefer the Orchard area, a lot of anticipation.
Right next to Orchard Boulevard MRT station.
That's right. Upper House, right? And this is slated to come on stream somewhere middle of the year.
Right.
For those that like the Tengah area, we have Auto Place in Plantation Close.
That is a EC, executive condo.
That's right, EC. So, and EC is always a favorite amongst our first-time buyers as well as for upgraders.
Right.
Lastly, Robertson Opus at Unity Street. All right, this will also be slated possibly in the third quarter.
And this is a 999 leasehold property. All right. So for investors, there's so many upcoming opportunities for you to acquire, all the way from food factory industrial property to residential freehold property, a whole list for selections.
Yes.
Okay.
So there's quite a lot of coming on stream, and we want to keep you updated with the latest information and of course perspectives and views on how to navigate the current market situation. So at this point, I would like to invite you to perhaps scan this blog.
Scan on
to
the
access
QR
our
code.
blog. The blog is prepared by our in-house research and market intelligence team, right? And they write a lot about what's going on. They're very in tune with the ground, and they write a lot about what's going on and how to navigate in the current stream of things.
Yes. All right. With all our ground information and market intelligence, certainly will help you explore current issues that will shape the property market so that you can make informed buying and selling decisions.
That's right.
Well, that's all for Realty Talks today.
Yes. So we've come to the end of today's segment.
All right. See you again.
Good night.
Bye.
Bye.
Well, thank you, Marcus and Eugene, for your invaluable insights tonight. Now, before we go, don't forget to join us as an ERA VIP. As a VIP, you will enjoy priority access to exclusive seminars and the latest property insights and special perks tailored just for you. Plus, every month, 10 lucky VIPs stand a chance to win 1,000 in travel dollars, redeemable across 12 exciting destinations in the Asia-Pacific region. To stay in the loop and be part of this exciting journey, follow us on ERA's social media channels. Thank you once again for joining us, and we look forward to seeing you at our next Realty Talk. Have a wonderful evening.